Hey, good morning, Arturo, Michael, Don, Donald, Larry, Maurizio, Gene, Ben, Rungamer, Patrick. Good morning, everybody. How's it going? Everybody have a great weekend. Glenn, morning. Kimberly, my lovely wife. PD, Ken, Kevin, glad to see everybody. Welcome, welcome, welcome. If you're wanting to chat with me while I'm live, make sure you hit the subscribe button right down here where the monster is. And got the great monster going today. Click the button, be a subscriber, and while I'm on the live stream, you can chat with me. It just pops up auto magically if you're on the computer browser. Mobile, you may have to turn your phone sideways or something to get it to see. If you're on a TV, I don't know. Anyway, yeah, the grape ones are pretty good, Patrick. Nice grapey flavor. I like it. Anyway, glad to see everybody, and remember, while you're at it, you might as well hit the bell with the doodads and get notified when I go live every single morning. Try to give you some, what I'm seeing in the markets. Just share with you what I'm seeing. I tend to get it right more than I get it wrong. Otherwise, all these lovely people would not be here with me. And yeah, remember on Tuesdays at 5 p.m., I take your request for 30 minutes at least. And usually lately it's been an hour plus. And so if you got requests, come visit me Tuesday, 5 p.m. Eastern, and I'll hit them all. Usually stay till I'm done. Anyway, good morning, Craig and Dan and Harry. Good morning, good morning, good morning. Glad to have everybody. All right, M2 Money Supply. That was the headline on the video. Let's talk about some stuff here real quick. We're not even going to talk trades yet, so I'll start with I'll just go ahead and share this, and look what we got here. So we've got a problem with banks, and Morgan Stanley issuing this giant report saying that probably not past the banking problem. This is one of their internal trader memos, internal trader memos that gets released out. I have a premium subscription to get this stuff. This is just a summary. You can click all the links and get the actual documents. But they're kind of outlining the fact that they're going, right now, the capital requirements from the Fed apply to banks with 700 billion or more in total assets. And this is going to affect the capital requirements for securities that may be underwater that are available for sale. It's a big bunch of gobbledygook. But bottom line is it has to do with CRE. Most of those smaller banks in that less than 700 billion down to 100 billion, that's category 3 and 4 banks, they deal heavily in commercial real estate. Now, commercial real estate is having a problem. If you aren't aware, there's a lot of floor space available, and it's kind of at a record thing. Like the available floor space right now in the United States for commercial real estate is like the equivalent of what we have in New York City. And it's spread out among lots of towns. There's a large bit of it in San Francisco right now, but that CRE, a lot of it has been financed with expirations in 23, 24, and 25, maybe a little bit into 26. And that's all going to have to be refinanced. If we keep rates at these high levels, that CRE debt, commercial real estate debt, can get underwater very, very quickly and compound the situation. Now, the interest rate being high is what has caused, the U.S. 30-year mortgage to hit the highest level in 23 years, right there. We did that basically Friday, and I think we're on schedule to go higher, and it's just going to exacerbate the CRE problems too. So here's the record: money supply growth hit the biggest negative value we've ever had since we've been keeping track of it in the 1960s. The brighter green line. There's a blue line and a green line. I'm pulling this off of State Street. and I don't have the ability to change the colors, but the greenish line is the one that's further down here. Negative 4.63 is the money supply growth, which is negative growth. That is the biggest down we've ever had. So money is coming out of the market faster than we've ever had before. But I mean, we don't usually hang out negative. We usually grow the money supply. But we had this large spike due to the COVID pump in the money, and we're not even anywhere near taking that money back out. But taking money out of the market can make us drop. All right, liquidating, pulling money out of the markets with interest rates can exasperate the problem. And we're already seeing the money supply shrinking, and that's the ECB, the European money supply, and it's down to 1.29. It's still growing, but that's like the lowest level it's been since they've been keeping track also. So both of these showing that less money pumping into, the central banks are kind of tightening their belts. And how long before they have to loosen back up again, though? When do they cause the financial problem? When does the financial crisis kick off? So this is the question. How much money can they absorb out of the system or suck back out of the system before it creates a problem? So this was the record, a largest shrinking money supply we've ever seen, ever. So how does this affect the markets? Nobody really knows because we've never done this before. All right. That's the scary thing is, as I've talked about in the past, the market is like 98% correlated to the amount of money that the worldwide feds pump into the market. So if they're sucking money out of the market, we could be in for a bigger down. And we're talking lower low than we had last October. Could it be this simple? I pulled up this chart. I found this. I was just banging around and found this thing right here. This is a pocket card that somebody scanned in. And if you look at it, we have periods where panics occur and will probably occur again. This one was off just a little bit. This was printed way back when. It's dated down here in 1875. Right here, 2020 was our problem, and this was 2019. If you look at the market, we were actually kind of stalling out into 2019. Then we have 2023 at the bottom as a good year to buy. Years of hard times, low prices, arguably early 2023. That was the time to buy. Now we're looking like this mini peak in 2026. Years of good times, high prices, good times to sell, right there, and we could have the next low in 2032, and then a panic in 2035. So that kind of corresponds with the cycles that we may see in the market. So anyway, I'll share that with my premium VIP subscribers in the channel, and if you want that little tidbit. So that's pretty interesting, isn't it? You look at the years; these line up pretty good with freakouts in the past. This was printed a long, long time ago. And it has some fib numbers in here and a little bit of other interesting numbers, and it's an interesting pattern. So, and you can extrapolate this thing on out. I thought that was kind of interesting. I'm always looking for patterns in the market. There's an interesting one right there. So, before we start talking about trades, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, and fun. It is not a recommendation to buy or sell anything, financial instrument or otherwise. Don't buy anything from me. Don't buy anything from any guru hawking anything unless you trust them and you want to go further with them. All right. You can do this stuff on your own. I try to help you accelerate it and cut out some of the crap that I went through for years. If you desire personal financial advice, though, you got to hire and consult a financial advisor. Has a fiduciary duty to take care of you. All right. Glad to see everybody. Chat's active this morning. Hey, Arthur, glad to see you. And let's jump into what's moving today. So S&P 500, let's go up there first. We are probably, we've got the 3% pullback. And if you look at it right here, we're definitely probably coming down to retest this consolidation. We're right at the top of it. It would not surprise me one bit to see a little deeper test of that. And look at the simple chart. We're almost down to the level here. We may see a significant bounce and a further push and retest that. And it could last us out into late September, October, this current correction. So be prepared. Now, the alternate scenario, glance off that 1618, bounce back off the 1272, and go for an extension. That's another pattern that we track and talk about, where we bounce off the 1618, bounce off the 1272, and then go for an extension. That extension could be all-time highs. This little retrace could be all we need to blast on out to all-time highs. Could be. I'm kind of leaning for the deeper correction here because we haven't done one since all the way back here in March, where we bounce off the roadmap line. So just keep it in mind. I'm watching it. I'll update you if you're in Discord. I'll keep you updated on the twists and turns as we move along. Now, looking at the ES, we were negative, we were positive. We've just been chopping around since we opened last night at 6 p.m. We poked down, we poked up, we bounced off the roadmap line, and lately, every time we've done that, we've gotten an extension lower. Now, Friday, we did make the lowest low, and we do not typically make bottoms in the market on Friday. There's like a 90% chance we're going to make a lower low today or tomorrow. Looking like today, right here before the open. So we can get a strong reversal off of that low. Just be cautious, be careful. All right, know where your money is. It's not being wrong that costs you money, it's staying wrong. Keep it in mind. All right, know where if you're going short, know where your profit targets are. Don't just, I'm going to ride this puppy to the dirt. Keep some profit targets. This is not the environment for we're dropping out and going lower low yet. All right, this is a choppy, it's like the stair steps down. This is a controlled, choppy liquidation. All right, we're going to probably make just an incremental lower low like we've made down through here. If you run the trend line, this is ES. If you're unfamiliar, S&P 500 futures, probably going to come down here somewhere around 44.50 and then bounce. Would be my guess, just based on the trend for the last week or, I guess almost 2 weeks now. Be careful, all right? Probably going lower. Everything's kind of biased lower. NQ, same situation. That's the S&P, that's NASDAQ right there. NASDAQ E-mini futures. If you're unfamiliar, it's like QQQ. ES was SPY. If you don't ever watch the futures, this is how the mainstream media and the news knows how the market's going to open before it opens. If you're watching the news in the morning, you're like, how's that thing going to open? How do they know? Right there, it's the futures. All right. They're watching this futures pricing, and we do tend to get some volatility right when the market opens here. We'll see it in about 2 minutes. And Russell also on a downtrend, probably getting that bigger retrace that I was talking about on the daily. Probably coming back into the zone right around 1870. This is like IWM, small caps. This one's accelerating down a little faster. It's been on a more bearish trajectory. Yeah, probably coming down here around 1870. Now, is that today? Probably not. Is it sometime this week? I don't know, maybe. Is it probably happening in the next week or two? Yeah, probably in the next week or two. All right. Hey, good morning, John. Glad to have you. CL so far bounced off of that resistance and likely to get a retrace. Now, we could just break on out. If we do break on out above the high right here, probably heading on a path up to this $94 area, 93, 94. If we hold that resistance right there at 84.50, probably coming back down here to the roadmap line. If we get here and we bounce, I'm probably going to load up for that move on up there. So, hey, I can't tell you. I'm not giving advice. It's up to you. Are you? I think we're just incrementally chugging lower, and we're going to get a bigger retrace. I mean, the simple way to look at it right here, we may come down here, touch this 44.25 area. Now, S&P 500 tends to run about 20 points lower than the futures. Oh, there we go, opening, gapping down. That's a lower low already. Probably. Don't have the candles, but lower low on this chart. Push down, that 44.25 area. We may see a daily close in that zone and then a bounce up to about 45.20, about 100-point bounce. And then we may see this move on down into this zone. That's kind of the simplified way. Now, what happens here? Not sure yet. Not sure. We have to see how this structure's forming, all right? And if we don't even hold support there and we just keep on pushing lower, got to watch out below. There's deeper supports down here. Circling back, oil. So probably lower. Gold, back to the roadmap line. I thought that might be the case when we came back to the bottom of the box. Right down the vicinity, watch for this to push down into that roadmap line zone around 1935 and then get a reversal out of there. Now, if we start pushing below these lows over here, probably going to do something different, something deeper, something further down the rabbit hole. Bitcoin just keeps consolidating. Hasn't broken out, hasn't broken down, just sideways. I mean, we're at the lowest volatility we've ever had in Bitcoin right now. Just crazy that it just keeps chugging sideways. Eventually it's going to pop out of here, but not yet. It may take a spike down, may do that really fast, and then get a sharp reversal that takes us higher. We've seen stuff like that before, where we get a big spike down, we kind of hang out, and then rocket off. Happens plenty of times. I had an arrow just like this. Took us a few extra weeks. Then we got there, and we took off. All right, that's the pattern. Ethereum looking a little more bearish, though. Didn't make a higher high here, and probably going down to this zone down here around 1450 to 1600 area, somewhere down there where that big oval is. Dollar potentially breaking out over the roadmap line. We'll see if this does this again, or if we actually start breaking above prior highs. We start making higher highs, dollar can change up its tune a little bit. Right now, we're looking at a downtrend, still intact, but we're getting close. We start pushing up through that trend line, start breaking up above this high, the dollar can make an extension, and it could be a significant extension. We haven't really had a major retrace since the whole drop started back here to that lowest low. A major retrace would take us up into this 108 area, right up in here. All right, stuff moving today. Monday, bouncing right off the roadmap line. That is a classic pattern. Classic. If we get above 177, probably heading to 199, possibly 212. That one looks pretty ripe too. Aggressive entry is now, and conservative entry above 177, 178, and then looking for 199 and 212 on the upside. Probably take a few days to get there. You can see this is a daily chart, but it does tend to get some hustle on it. So X, nice pop right there, right up into resistance though. If that turns down here, it's probably going on down. That is a resistance point. That's this is like flip a coin. That's like the conservative entry, but if that candle turns red and starts dropping, watch out below, because that is a resistance. It's right on it's like a coin flip right in there. We want to see continuation higher, not dropping. If it does get continuation, 3450 would be the upside target on X. OKTA getting a little pop, but still under the roadmap line, still a bearish bias, and probably if it stays under this roadmap line, probably headed back down to a test like that, because that's kind of arcing off, like it's come back down. NUE, nice little pop, but it's stuck at that consolidation like I was just talking about on X. Stuck right there, hasn't been able to push up, hasn't got continuation. That usually leads to at least a retest of the roadmap line right there. PSN, I mean, news doesn't necessarily move the charts. So you could say it moved on news, but that was a retrace right to resistance. And that's exactly what it needed. 1, 2, 3, even though it had happened fast. And we can get continuation lower. All right. Let's see. Oh, that was the wrong thing. Let me use a different tool here. Let's check something real quick. That move and that move. Yep. 1, 2, 7, 2. Exactly. That's 1, 2, 3. And if we turn down from there, watch out below. Watch out below. PSN. Nice pop. Probably right up to extension targets. Yep, 1618. Would not surprise me to see a retrace back to back to 50 right here. Would not surprise me, but it can extend on out to 59.60 as the next level up. STLD, just farting around on the roadmap line. Below resistance, if it gets below 99.50, probably going lower low. If it can break out above 112.50, probably going on up to like 149. Tesla making the biggest loser list. That's funny. And a little humor on TradingView, apparently. Looking for this to drop on down to the roadmap line. I've been calling 220. A few people on here have told me that I was full of crap, and we're almost there. Another 15 points. Then do we hold this area down here? 210, 220, that's my zone. We could hold a little high at 225. That's where the roadmap line is currently sitting. And we'll see what happens. We just keep coming on down. SMCI, probably heading back to the roadmap line. I don't care what kind of price target, raise, whatever happened. It's on a path, probably going to retrace at least back to the roadmap line. We could stall. These things could come together like right there, those lows and the roadmap line could meet up right up here. And it could take us right down into there to get there. So that kind of all comes together somewhere around September, end of August, September. So we may drift on lower for the rest of the month in SMCI. HE. Oh, look at that pop down. Ooh, bearish, bearish, bearish. And that's what happens when they can't get above the roadmap line. That was a 3-wave into the roadmap line and big down. Big down. How are we looking? That's super extended to the downside. Remember, they can go to 0. And yeah, no. Guess that's what happens when a bunch of your customers' places and your facilities burn down. Hate to see it. Feel for the people of Hawaii. That was horrible on Maui. If you're not familiar, lots of wildfires and just burning whole towns. FTRE, not enough chart to tell, but that's IPOs tend to be bearish if that was an IPO. Usually there's a little dinosaur down here when it's an IPO, but IPOs are bearish, probably going to push lower till it can find the downside. And maybe around 24, possibly 21, maybe. BASQ. Yeah. I think that was on the list last week. I said it'd probably come back. It came right back, even below the IPO. MAR. That one's finally getting a move. Upside resistance probably at 213. And we may see it find resistance there, retrace back to here, and then if it holds here, rally up to there, 234. FNGU, getting dang close. Getting dang close. That was a head and shoulders pattern that plays out right down here around 148. And there you go. I don't think Tesla was rallying on that news last 2 weeks ago, so I don't think that's the reason that Tesla is doing anything. I don't. Tesla was. They were saying it was rallying on that Zuckerberg and Elon gonna cage match. Now you're saying that it's dropping. Pick your headline, I guess. BTAI dropping out now, and that's lower low. Be careful. That was a big 3 wave, and that's looking more like a 5 wave that can extend on down. Wave 1 was like that. If wave 4 was there, wave 5 could take us down to. I'm gonna have to go log mode and put that back up there. Come on now. Let's just redraw it because that's stupid. Gotta go log mode when it goes down to practically 0. I guess on this scale, it's already outperformed. Yeah, that's the way you got to use log mode sometimes when they move crazy big. How low can she go? She can go to 0. ALB. Oh, breaking the head and shoulders pattern. Probably not gonna work out on that one. This shoulder gets down, and we get below this low right here at 170. 171, 170. We get below that low, that pattern's wrecked, and it's probably getting an extension lower. Baidu needs to hold onto the roadmap line here. If it doesn't, probably gonna go much deeper. Potentially back to the orange box one more time. Right back to the lows right there, and we'll see what happens. AMC. Closing a bunch of theaters is not positive for your stock price. And I think they're on a slow bleed out to death. Hate to say it, but there you go. Watch out below. Been holding below the roadmap line for a long time. All right, bias for the day. Expect a lower low and then probably a bounce. I mean, it's kind of as simple as that. That's the pattern we've seen for days. We could break down lower. If we get below this trend line of the lows, we could accelerate down, get a flush, and then a sharp reversal. So that's the parameters right now. I'll try to keep you updated in Discord. If you want to come join me in Discord, if you're not in there already, the link is down below. It does cost $5 because I like to hang out with people that support me. So support is $5, and there's like an opportunity to add 12 more months for like $19 or something like that. So you can get like 15 months of support for just like $25. All right. Have a great day, everybody. I'll see you later. I'll be back tomorrow. Do this all over again, and stay safe out there. The account you save